Hi everybody, I'm doing problem 7-8A. Hopefully we can get this done. It's kind of late. So I'm hopefully going to make it to the right time to get this posted. Anyway, so I'm doing it in Wiley Plus so you guys can see that everything's right in here. You're given a whole bunch of information for Concord Corporation. Remember, your amounts are going to be different than mine. And then you're given their sales, purchases, all that stuff, and then you're told that sales and purchases are on account, that the budgeted collections and disbursement data is given down here, and then all other expenses, so the salaries, administrative expenses, and selling expenses are paid in the month incurred, except for administrative expenses, which include $1,400 of depreciation per month. So this amount here is going to actually be less than what it shows. Then we're told that the cash balance on January 1st is expected to be this, and the company wants to maintain a minimum cash balance of this. So we're supposed to prepare a cash budget for January and February and enter 0 for amounts that are supposed to be 0. So in your title of your thing, it needs to be for the 2 months ending February 28th, because we're doing it for January and February. We start with our beginning cash balance in our cash budget, and we're told up here that January 1st is supposed to be $47,600, so that's where we get this number. Now for February, we don't enter that yet. That's going to be entered later, because we'll find that out by what the end of January is. Next, we're going to add cash receipts. So we start with the collections from customers here. It gives us all this information right here. So we just enter those numbers into this field here, and then this one in January, or in February. And then notes receivable would be next. And that other receipts right here under number 3, January, we collected notes receivable here for $18,900 and nothing for February, so we enter a 0. But it does say that in February we sold some securities, so we do sell securities, 0 for January and $5,100 for February. So then we have our total receipts. Here we just add these 3 numbers up here to get this $348,600. And then we add these 3 numbers here up for February to get the $384,000 for February. Total available cash is what's next. We're able to get that for January because we already have the beginning cash balance here. So we just take this beginning cash balance and we're adding, remember we said add over here, so we're adding our total receipts to that, and we get $396,200. We can't do that for February yet right here because we don't have the beginning cash balance as of yet. Then we go in here. Next, we're going to take out, so less cash disbursements. It tells you your expenses up in this chart up here. So we're going to put the salaries in first, then administrative expenses, minus that $1,400. So we're going to take the $71,800. We're going to subtract $1,400. So we're going to actually enter that as $70,400. And then the same thing here. We're going to subtract $1,400 from this $74,900. And then we're going to add in those selling expenses down there. So we have salaries, then we have our administrative expenses and our selling expenses. Now there's 2 more fields here, so we have purchases and dividends, and that gives us that information right here. So we have payments on purchases here, so the $108,800, and then the February amount for over $143,000. And then our other disbursements, it tells us in February we paid this cash dividend, so we added that in down here. So we've got our purchases here, our dividends here. January we didn't pay any dividends, so we didn't have to add any there. Our total disbursements, once again, we're just adding all of these up to get our total disbursements here for January. And then for February, same thing, add all of those up to get this total disbursement. Now for excess or deficiency of available cash, for January we can figure that out because we just take this number right here, our total available cash, and then our total disbursements. We subtract total available cash and we subtract the disbursements from that, and then we get this 54,000. Now we're told up here that they want to keep a minimum balance of $51,430. Since we have $54,500, we don't have to borrow any money, and it doesn't say that we're going to repay anything, so we don't have to do that either. So our ending cash balance is this. Since we now have this number, we can put that in for February all the way up here. Then we can go through and do our math again. So we have this, and we can take that and add it to our total receipts to get our total available cash, which we can then take our total available cash and subtract our total disbursements from it, which will give us this 41,300. Now again, we know that they want to end, we got to scroll back up here, sorry, with the minimum cash balance of 51,430. So we're going to have to borrow some money to figure that out. You take the 51,430, subtract 41,300 from it, you get $10,130 that you have to borrow, which gives us our grand total of 51,430. I hope that explains everything for you. Let me know if you have any questions. It's a lot of stuff, but if you just go in order, then you should be able to get it all down. Remember, your numbers are going to be slightly different than mine are. Thanks.